Hey guys, it's Luca from FoilMagicCards.com, and today I'm going to talk about some of the big lessons, 4 lessons exactly, that I learned from investing in Magic cards. So this is an article that I've written for Quiet Speculation. You guys should go check them out. I think it's a really good place if you want to get into more Magic finance stuff. Um, that's actually how I kind of started my journey. I started reading articles there. But in this video, I'll kind of just go over it quickly, and in the article it'll be in more depth. But yeah, so I started investing in Magic about 7 years ago. My starting point was by going on Quiet Speculation and starting to read the articles. I started investing on Magic Online, I think. But it's been 7 years now, and I've evolved a lot as an investor. I've also read lots of books outside of like Magic investing. I've read lots of books about people who invest in the stock market mostly. Um, you know, Long-term investors, momentum investors, swing traders. I've read about automated trading systems. So I've really kind of immersed myself in investing over the past few years. Also, my academic background is kind of tangentially related. I studied economics, microeconomics, game theory, math, that kind of stuff. So yeah, it's just something I've always been very close to my whole life, investing. So here are like 4 big lessons that I learned, mostly from Magic investing, but also outside. So the first one I learned is there are seasons in investing. What I mean by that, I mean like different strategies work at different times. So looking broadly at let's say equity markets and debt markets in the U.S., there are times when stocks are a really good bet. People make a lot of money in stocks. Then there are times when bonds are really good. People make a lot of money in bonds. There's times when commodities are great. There's times when tech is great. There's times when the big staple companies are great. Recently, the best bets would have been in kind of like the FANG stocks, or kind of like these monopolistic tech companies like Facebook, Google, Amazon. So that's one of the big things. You don't want to get attached to a certain strategy. So if we're thinking about the Magic investing, MTG finance, um, if we're thinking about just within MTG finance, for example, there was a period when the reserve list was really hot. Okay. Right now, I think reserve list is not that great. Maybe it'll come back, maybe it won't. There were times when investing in standard and modern was really good. So you want to be aware of like these shifts, and you don't want to be too attached to like what has worked in the past. I think it's more prudent to be thinking about what's going to be good in the future. Okay. So in my case, the conclusion I came to, and maybe you'll come to a different one, is like foils is what's next. Foils is like that thing that could get really hot in the future, kind of like untapped potential. So that's a big thing. You want to not be so attached to like what has worked in the past, because these things are constantly shifting. Just like a metagame in Magic is shifting, there's times when control is good, there's times when combo is good, times when aggro is good. You don't want to get attached. Okay, so you want to be like adaptable. Okay, the next one is smaller markets equal bigger returns. And I've talked about this in another video on this channel, but there's this like really prevalent, it's almost like a law, that the smaller the market is, the bigger the returns are. Obviously, if the market is too small, like let's say the market's only $100, the whole market, you could probably make huge returns, but it's not really worth your time because it's so small. That would be something like cornering your local gaming store market or something, right? And then when the markets are really big, like U.S. Treasuries or the stock market, it's going to be hard to get high returns because you're competing against the best of the best. They have millions or billions of dollars to invest in research and high-tech equipment, and you can't really compete that well with them. So you kind of want to find that sweet spot of like, what is the market that's big enough that I can put all my money into it, but small enough that I can get these really nice returns because it's like a very niche market and big players aren't really looking at it. So within Magic, you can also break down into smaller and smaller markets. So within Magic, I like to look at the collectibles, which is more like the old stuff. It'd be like sealed product and graded product. or just stuff that set collectors are going after. And then within that, I've even gotten a smaller market, a more specific market, and I've gone for foils because I think that's kind of the sweet spot for me. So always, I think that's like really good to keep in mind, especially if you're not like a professional trader. If you just do this on the side for fun, and maybe you're just investing a few $1,000 or a few $100, it really just pays to go into smaller stuff. Like why bother investing in big markets? Niche down into something super small, super specific that you know a lot about. Okay, the third one is macro versus micro, or macro greater than micro. And what I mean by this is understanding macro factors I've found to be way more important than understanding micro factors, right? So rather than trying to figure out what is the best card in a set, that's super important and it's helpful, but I've always found it more important to understand like what's happening to the set as a whole, right? So like on Magic Online, maybe I'm looking at Kamigawa, the new Kamigawa, and I'm trying to find like, okay, what's the best card in Kamigawa to invest in? Yeah, that's important, but maybe even more important is understanding like what is the ebb and flow of the set of Kamigawa, right? Because in the beginning, when it comes out, it's super expensive because there's no product out on the market, but then everyone's drafting it, pushes the price down. And then the next set comes out, people stop drafting Kamigawa, and the price of the whole set goes up. So there's this idea of like a tide lifts all boats or lowers all boats. So you want to be more focused on the tide and less focused on picking the right boat. Because if you understand the tide, you can kind of pick any boat and they'll kind of all go up. So that's number 3. Number 4, diversification is overrated. I think people are way too attached to diversification. I think people don't really understand the mathematics of it. Diversification is really only good if you have like equal bets, like with the exact same outcomes. If this is like if this bet has a probability of like 60 that it goes up and 40 that it goes down, and it goes up by a certain amount, let's say it goes up by $1 or it goes down by $1, and this other investment has the exact same probability, then yeah, I would want to mix between the two. And they have to not be correlated. But as soon as one of the bets is better than the other bet, I'd actually just kind of go all in on the better bet, right? So there's something that I've learned from Michael Saylor, which he says, diversification is selling your winners to buy losers, right? If you're diversifying and you know what you're doing, if you have no idea what you're doing, then yeah, you can kind of diversify because everything's an equal bet if you just don't understand the markets at all. But if you do understand the markets, then you're going to have, kind of like good bets, better bets, worse bets, horrible bets, and you would naturally go kind of all in on your best bets. And now if you're forcing yourself to diversify, you're selling off your best stuff to buy weaker stuff, and this almost always doesn't pay off. You need a very, very specific situation of why you would want to do that. So that's it for this video. These are 4 big ideas that I've learned in investing over the past 7 years, a lot from investing in Magic, but also looking at other things like equities and crypto and stuff. And they've all kind of led me into the foils of Magic. And then the last point has made me want to not diversify between foils and other stuff. 100% of my Magic portfolio, maybe 95% or whatever, is just the foils. So that's my strategy, and it's based on these things that I've kind of learned over time. Maybe be interested to hear what your guys' strategy is in the comments. I hope you guys found this video helpful, and I hope to see you guys in another video.